What's going on, everybody? It's Jake, and today we're going to be going over my US30 sell. So first things first, we're going to take a look at the 4-hour chart just to get a broader understanding of what's going on during this time. At the time, I was already had a preconceived bias of short. I was thinking that, considering that US job data from ADP was coming out at 8:15, that those jobs were not going to be sufficient and were going to be quite poor. And obviously, it's not very good to guess. However, it was kind of a good fundamental storm, so to speak. It just made sense the way that price was pushing back up into this all-time high zone. So over here, I'm just drawing a couple zones in the 4-hour just to get a broader picture of what's going on. These are the two main zones that I'm looking at. We're gonna hop back down to 1 hour to get a more micro view and a more realistic and more real-time view. Later on, we're gonna pop down to the 15-minute. So we're going to be using the bar replay tool to gauge and get a good idea of where the market was at when me and my friend were looking at the market at the time. We broke down this sell analysis on August 3rd at about 8 or 9 p.m. Eastern Standard Time. And as you can see here, we closed above the 100 and the 50 moving average, which is a very bullish sign, and I think a lot of bulls got trapped in that idea that the market was going to rally after everything that we had seen previously. We saw that massive fall, and then we saw this large impulsive correction, and now we've just been chopping around on the H4 time frame for quite some time. And you kind of see right here, this is where we are in present time. And I'm going to use the bar replay tool to bring it back to about 9 p.m. last night. Dropping down to H1, you have a clearer picture, and we're gonna clean these zones up in just a minute and make them more. We're gonna make them a little smaller and a little bit more accurate to fit this time frame. As you can see, there's 1, 2, 3, going to be close to 4 touches on that zone. That's an all-time high zone. Me, I'm just seeing all those wicks, and that looks like a lot of sellers entering the market. Same with this zone right here. If you combine those two top zones together, it's basically just a bunch of wicks and a bunch of sellers entering the market. I'm going to copy and paste and add this other zone right here. I think that could be a possible reversal area, which is also about the 50 to 61.8 from that swing low to swing high. If you're looking at it from a buying perspective, which I was looking at a short perspective, but I was looking and eyeing that as a potential regional take profit zone. So currently we have the moving averages all below the price, and assuming that job numbers were currently being priced in, again, I had short as a bias. So at this point, I'm just looking for a solid opportunity to enter into the market. And that black line right there is the 600 moving average. I have it on every single time frame. It worked really well on H4, bounced off it 3 times, and obviously on H1 you can see that massive blue reversal snapback handle. Just reversed right back to the upside after touching it. Obviously a very valid support zone. So we let a couple candles go by, and we see it retest that zone twice, and potentially the buyers might be getting tricked into thinking that that is a buy zone because the 100 and the 50 moving average on H1 is technically being retested twice, but in reality it's just a liquidity grab. So if we just go ahead and let the next 2 candles go by, you can see that after this massive bearish candle on both of those impulsive moves, those 2 blue candles right there, even though it does look like consolidation, just looks like a small retracement for a downside push. And as you can see, if you draw a Fibonacci retracement from swing high to swing low, push that up a little bit more, You can see it's a pretty clean rejection off the 61.8 zone. So at this point, I didn't place an entry there. It was a little too early in the morning. I believe that was about 6 or 7 a.m. I was waiting for a closure below the 0% Fibonacci. And my take profit zones minus 27 all the way to minus 300. As you can see, the 600 moving average is eyeing right around the minus 300 take profit zone. So that's kind of my final take profit zone, hopefully if fundamental conditions and technical conditions continue to line up. And boom, right there we have a drop below the 0% closure, and this would be wise to add your first position here. Stop loss right above the 886, take profit down to the minus 300 area. Let's see what happens in the next candle. We get a closure below both the moving averages. Also a good sign. That also happens to be the 8 to 9 candle, right where the news came out with these poor job numbers. Again, the previous was 680,000. The consensus was close to 700, 695, and the actual was 330,000. So that's significantly less than expectations and the previous, which obviously would instill some fear into the market. So at this point, I kind of knew my bias was confirmed, and I had one other position added. And then the next candle happens, we get the first touch of this zone. It reacts quite nicely, the minus 161.8 take profit zone. So then this is probably at the point where I thought it'd be a good idea to not look at H1 anymore and go to the 15-minute. If you want to take some profits, you could have got 141 points real quick. If not, at the closure, it still would have been about 80, 85 points. So going down to the nitty gritty, there's that black moving average again, the 600 moving average, but this time on the 15-minute chart. And as you can see, it closed below it, and the second it did, it just started to melt. Obviously a very significant level of resistance and support. You can kind of see chopping around right there, broke right through. And now at this point I'm thinking, hopefully in a way, probably it would look scary in real time, but I was hoping for a bullish retracement back from this swing high to swing low, which is also the 61.8% Fibonacci retracement. So at that point I saw a huge blue candle, touched that, started to wick, placed a sell order just a little bit below that for another position. So at this point it'd be wise to enter another position, as this is very clearly a liquidity grab. There is no bullish momentum in this market. It is just in order to push price even lower. And obviously it's hard to pinpoint these exact liquidity grabs and stop loss hunts for those late entries, but it's just something a trained eye has to work on. Stop loss right above the 50 moving average on 15-minute. So we are in a good spot risk management wise, getting close to putting that first position and take profit most likely. So we have another Fibonacci retracement drawn as a tracer. That minus 61.8 lines up perfectly with the minus 300. So again, that's where both my take profits will be for this trade. Bring that down here. And we'll see how the rest of this trade continues to play out. Yeah, so at this point we're about 140 to 180 points of profit. As you can see, the moving average is right there. That's where we're eyeing. Hopefully we can break through this zone. Looks like we could chop around right there, as you can see all the wicks in the past. So we're going to see how price reacts. Right now, maybe even be a wise place to put your trade into break even. So you can do that right now, right above your original, or excuse me, right at the stop loss of your second position. You put your original. Let's see what happens. Bearish impulsive, bullish correction, grabbing the sellers right here, wiping the sellers out of the market, wiping the buyers out of the market, and it's acting as a pretty nice support right now at the 0% Fibonacci, or the minus 161.8, which is also the same area where I was concerned about price dropping through. As you can see, the next candle closed below that, so might even be wise to enter a third and final position. I personally wouldn't enter this position right here. This is a little bold for me, especially because it's only about a 1-to-1 risk-reward ratio, which is fine as long as you're very much in profit and you're confident in your analysis. But we get a closure above that. We have to be careful of a little retracement, but it could just melt. And as you see, we just continue to melt. Closed bullish, but not very bullish. Next candle, bearish, and look at that. We basically tick the minus 261.8 and the minus 300. And at this point, I was pretty content with closing my position. I felt very confident in the profit secured and the pip secured and in the trade itself. And as you can see, price kind of is chopping around here and consolidating, not really wanting to go much lower, not really wanting to go much higher, and on H1 would be hovering around the 600 moving average on H1. And all positions were closed out right there. So overall, really good trade, really clean trade. Very happy with this one. Fundamental catalysts coming into play, combined with technical analysis. Again, we were eyeing that moving average, touched it to the T. Very happy with that. And in a second, I'm going to clean up this chart real quick. But if you can see towards the top, there's actually a pretty nice head and shoulders pattern. We melted through all those take profit zones, but at the top you can kind of see we have that first impulsive move, and then we have the head to the left, the shoulder to the left. We have a head, and then we have another shoulder, and then the other fall down. And I know that US30 and the NASDAQ really like to repeat these patterns over and over again. You see that trend exhaustion, you see the poor job numbers, and it just plays out quite nicely. So this is my first video. I think we had about 434 pips in total across 3 positions. So very impressed with that. I look forward to showing more analysis as I progress in this trading game. Having a blast figuring out what exactly the market is doing, seeing what it's giving me, and just applying it and taking advantage. Being able to pull the trigger, execute, and have great on-point analysis. So I'd like to thank you guys all for watching. I appreciate your time, and I look forward to uploading more videos to show exactly what is going on, step-by-step analysis, nothing censored, just straight technicals, straight fundamentals, and how exactly a trade should be placed and how to manage it. So I'd like to thank you guys for watching again. Appreciate your time. And just before we go, I just thought I'd show this real quick. A lot of people say trend lines don't work, but if you kind of see before all that bearish movement, we have that descending channel from that wick, and then you clone it, and almost to the T if you look on the 15-minute. Not only did I retest that black moving average, which I was eyeing for at the time, I didn't even have that parallel trend line there, but as you can see with the Fibonacci, swing high to swing low, that I drew earlier, that black moving average, and the retest of that trend line. There's 3 confluences right there that add up almost perfectly. So again, don't let people say that certain things don't work. Just don't use one little technical element and use it as a final confluence. Use it in conjunction with fundamental catalysts and other technical conjectures. So again, I'd like to thank everybody for watching. Appreciate you guys stopping by. I hope everybody learned something today. If you have any questions, please leave it in the comments. I look forward to reading them, and I look forward to helping out anyone who needs any kind of assistance with trading. It's crazy how far you can come in a short amount of time. Only 2 years in the game. A lot more progress to go. Alright guys, I'm going to sign off. Have a blessed one. Take it easy.